Okay, now I want to show you guys the candlestick. So before guys, this thing will make more sense to you guys. So the candle is just for us to notice price. All right, so how does the candle move? We have what we call the open, the close on the candle. So we say the open of the close, then the close. Like it's just like when price open, we have the open. When price close, then this week you see here is price extension. All right, initially these are just maybe the pushes price. Okay, so now on this candle there's what we call trend. All right, in candlesticks there's what we call trend. So this trend now moves in three phase. Okay, the trend what moves in what three phase. So one thing you need to know about this trend, it moves in three phase, which we say we have the uptrend, we have the downtrend, and we have the what consolidating in the candle. Okay, so we have the what the consolidating. So this same candlestick you just see, that is what we call this trend. All right, so first thing, if price breaks above a previous movement, we call it up. Remember, I'm supposed to be using trading language, but I want to make this very simple and very stick, so it can stick to you guys brain. So we use the concept of what? Up. So if price breaks above, we use the concept of up. So what's basically mean, and if price breaks below, we use the concept of what? Down. This simply means once you see price going to the upside, right, you want to buy. Then once you see price going to the downside, you want to sell. But if you see price going in range, all right, if you see price going in range just like this, we don't take trade from it. Okay, we don't initiate any trade from these markets, because first of all, it's not giving us any direction. Okay, so that's what candlesticks form. Okay, so I hope you guys now understand how the candlesticks form. Okay, so now let's go deep inside again on this movement and how this candlestick will be able to explode you guys brain, and how those candlesticks relates to those traders. Okay, so guys, so we have what we call time frame in these candlesticks. Okay, so the time frame is, guys, is just for those traders. Okay, so this basically means the type of trader you want to become. All right, so you need to know the type of time frame you'll be working on, because the chart is varies and is wide. All right, so first of all, the S simply means scalp, the D simply means day trading, then the SW means swing trading. All right, so over here on the scalp time frame, we have the 1 hour. So the like the pelota sellers, which I tell you guys, they analyze from their time frame, from the higher time frame, which is the 1 hour, the 15 minutes, and the 5 minutes, because they want to get in and get out quickly. Then we have the day traders, whereby they all trade from start the analysis from their 24 hours, the 4 hours, and the 30 minutes, which they want to all trade within 24 hours. They don't want to pass 24 hours. Then we have what we call the swing traders, which they start their time frame from the weekly, the 24 hours, and the 4 hours. Okay, which all these people all trade for weeks. All right, for the entire weeks or for more than the entire weeks. I hope you guys are understanding this section, because I want this everything here to sink in. That's why I'm putting everything together, so everything will sink in quickly. All right, so let's get to work on the next section.